Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel, where you learn about stock investing and personal finance that will help you become a great investor. In today's video, I am going to talk to you about one of my favorite stocks, Alibaba. I've been a long-term investor in Alibaba since it went IPO on September 19, 2014. I am going to talk about why I believe Alibaba will reach over 1 trillion in market cap, or $382 per share within 2 years. I am going to cover these topics in this video. First, Alibaba's stock performance since its IPO compared with the S&P 500 index, and why I invested in Alibaba. Second, what are Alibaba's long-term growth prospects, and what are the catalysts that are driving Alibaba's long-term growth. Third, how long it will take Alibaba to grow over 1 trillion in market cap, or over $382 per share. Fourth, what is Alibaba's competition and risk? Fifth, conclusion, why I think Alibaba will reach over 1 trillion in market cap, or over $382 per share within 2 years. If you like this video, smash the like button and subscribe. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. Let's start. First, let's talk about Alibaba's stock performance since it went IPO on September 19, 2014 compared to the S&P 500 index. When Alibaba went IPO on September 19, 2014, the company was valued at 230 billion. It was the biggest IPO in history. Of course, most people will not be able to buy the stock at the lower IPO price before the stock became available in the secondary market. But if you invested in Alibaba stock after IPO, here is how much you have made. Since Alibaba's IPO on September 19, 2014, the stock increased as much as 230.09% if you bought the stock right after IPO. If you compare with the S&P 500 index, the S&P 500 index increased by 62.65% during the same period. Recently, Alibaba stock dropped as much as 14.63% after Ant Group's IPO was suspended in November 2020. I think that is good news if we want to buy Alibaba stock, because the stock is literally undervalued. I first bought Alibaba shares when it started trading in the secondary market because I knew the company has excellent long-term growth prospects. And more importantly, I knew Alibaba is a near monopoly in China, especially its e-commerce business consisted of Taobao Marketplace, Tmall, 1688.com, Alibaba.com, AliExpress, and its Alipay platform, which is owned by Ant Group. Alibaba owns the most e-commerce market share in China compared to its two biggest competitors, Pinduoduo and JD.com. Second, you may wonder, what is Alibaba's long-term growth prospect, and what are the catalysts that are driving Alibaba's long-term growth? Before I answer this question, I want to talk to you about Alibaba's core businesses that are driving the company's long-term growth. First, Alibaba's main core e-commerce business consists of, first, Taobao Marketplace. It is China's largest mobile e-commerce platform, mainly for small businesses selling products directly to customers. Second, Tmall is China's largest online and mobile platform for large brands and large businesses selling products to customers. Third, 1688.com, which is the domestic version of Alibaba.com, is China's largest domestic wholesale marketplace for wholesalers selling products to buyers. Fourth, Alibaba.com, which is the international version of 1688.com. Alibaba.com is China's largest international wholesale marketplace for wholesalers to sell their products to buyers in the international market. Fifth, AliExpress is one of the largest online marketplaces that allows customers to buy directly from manufacturers and distributors in China. The second core business is Alibaba Cloud, which is similar to Amazon's AWS. Now, do you know that Alibaba Cloud is the largest public cloud in China in platform as a service and infrastructure as a service? Alibaba also owns 33% of Ant Group, Ant Group owns Alipay, which is one of the two dominant mobile payment platforms in China. According to iResearch, Alipay owns 55.4% mobile payment market share in China, versus WeChat Pay's 38.8% market shares in Q1 2020. According to eMarketer China e-commerce 2020 research, they expect that China will overtake the US to become the world's largest retail market for the first time in 2020. Their e-commerce report also estimates that Alibaba, JD.com, and Pinduoduo, three of the largest e-commerce companies in China, will have 83.6% of the retail e-commerce market in 2020, compared with 80.3% of last year. Now, I do not have the most updated 2020 e-commerce market share of Alibaba, JD.com, and Pinduoduo, but I want to share with you their market shares in 2019. In 2019, according to eMarketer, Alibaba had the largest e-commerce sales market share of 55.9% in China, compared with JD.com's 16.7% and Pinduoduo's 7.3%. The biggest catalyst that is driving Alibaba's long-term growth is that more and more people are shopping online using their mobile devices instead of going to stores in China. The current pandemic has moved e-commerce growth for at least several years ahead in China. Right now, China has the biggest population in the world and has the most smartphone users. According to InternetWorldStats.com, China currently has a 1.4 billion population versus United States 331 million population in 2020. According to Alibaba's September quarter 2020 report, the company has 757 million annual active customers and 881 million mobile monthly active users in September 2020. This means at least 50% of people in China with a smartphone are already using Alibaba's e-commerce platforms to buy products online. Because of the pandemic this year, more people are shopping online in China more than ever. People are using their iPhones and their Android phones to shop online and to transfer funds through the two most popular mobile payment platforms in China, Alipay and WeChat Pay. Both payment platforms own 94.2% of the mobile payment market share in China in Q1 2020. Brick-and-mortar companies in China are switching to online sales because they know that they cannot survive if they rely on retail sales alone. Companies understand customers are much more tech-savvy nowadays, and they know customers are buying things online more than ever. So what does all of this mean to Alibaba's long-term growth? It simply means that Alibaba will continue to benefit from the current trend of customers shopping online through their mobile devices. And if Alibaba continues to maintain its current e-commerce market share of 50% or more in China, we can expect Alibaba's revenue growth will continue to grow for many years, especially since China already has the largest population and the largest e-commerce market in the world. Another catalyst that will drive Alibaba's long-term growth is Alibaba Cloud, which is already the largest public cloud in China in platform as a service and infrastructure as a service. Here is what Alibaba's CEO said about Alibaba Cloud. He said, Alibaba Cloud delivered strong revenue growth at 60% year over year during the quarter, with public sectors and financial services contributing the highest growth. We announced at our investor day that Alibaba Cloud is expected to turn profitable by the end of this fiscal year. We believe cloud computing is fundamental infrastructure in the digital area, but is still in the early stage of growth. We are committed to further increasing our investments in cloud computing. If Alibaba can repeat the same success as Amazon's AWS, the largest cloud provider in the world, we can expect Alibaba Cloud will be a huge revenue and net profit contributor to Alibaba in the future. Third, how long it will take Alibaba to grow to 1 trillion in market cap. Based on the catalysts I just mentioned earlier, I believe it will take Alibaba 1 to 2 years to grow from the current market cap of 706 billion to 1 trillion, or grow from $270 per share at the time of making this video to $382 per share. So to estimate how long it would take Alibaba to become a $1 trillion company or to reach $382 per share, let's take a look at Alibaba's net income and free cash flow growth between 2016 and 2022. Alibaba's revenue, net income, and free cash flow growth have been very consistent for the past 5 years, especially Alibaba's free cash flow growth. Of course, the past does not always repeat. As an investor, we should not use the company's past to predict the company's performance in the future. But I believe Alibaba's e-commerce and cloud businesses will continue to grow for many years based on the catalysts I mentioned earlier in this video. Let's use Alibaba's compound annual growth rate between fiscal 2016 and 2020 to try to estimate when Alibaba will reach $1 trillion or reach $382 per share. Alibaba's net income growth and free cash flow growth are the two main factors that determine Alibaba's stock price growth in the long run. Between fiscal 2016 and 2022, Alibaba's net income compound annual growth rate was 18.45% each year. Its free cash flows compound annual growth rate was 26.4% each year. If we use Alibaba's net income growth of 18.45% each year as a proxy of Alibaba's stock growth, Alibaba should reach $382 per share or $1 trillion in market cap in about 2 years. Now, if we use Alibaba's free cash flow growth of 26.4% each year as a proxy of Alibaba's stock growth, Alibaba should reach $382 per share or $1 trillion in market cap in about 1.5 years. Again, we're assuming that Alibaba's average net income and free cash flow growth will grow at the same compound annual growth rate as the past 4 years between fiscal 2016 and fiscal 2020. Fourth, what are the risks you should consider if you're investing in Alibaba? Alibaba's biggest risk is its competition from Pinduoduo and JD.com. According to eMarketer.com, Alibaba, JD.com, and Pinduoduo have a combined retail e-commerce market share of 83.6% in 2020. If you look at this chart from eMarketer.com, you will see Alibaba's retail e-commerce sales are much more than JD.com and Pinduoduo in 2020. Also in 2019, according to eMarketer.com, Alibaba had the largest e-commerce sales market share of 55.9% in China, compared with JD.com's 16.7% and Pinduoduo's 7.3%. Alibaba currently has the most monthly active users, 881 million, and the most annual active consumers, 757 million in China. Alibaba's businesses have gotten so big and competitive that most merchants are choosing to sell their products through Alibaba's marketplaces because Alibaba's platforms have the most monthly active users in China, especially in the Tier 1 cities in China. Pinduoduo is Alibaba's biggest competitor now. Pinduoduo currently has 643.4 million monthly active users compared with Alibaba's 881 million. Pinduoduo has 731.3 million annual active customers compared with Alibaba's 757 million. Pinduoduo's core business is in Tier 3 or 4 cities in China, where customers are much more price conscious. Pinduoduo uses a group buying business model and a consumer to manufacturer C2M model to help customers buy at a much cheaper price directly from manufacturers. In comparison, Alibaba dominates in the Tier 1 cities in China. Alibaba uses the more traditional consumer-to-consumer C2C, business-to-consumer B2C, and business-to-business B2B models. Now, Alibaba has launched Taobao Deal to compete directly with Pinduoduo in Tier 3 or 4 cities in China. Conclusion: why I think Alibaba should reach $1 trillion in market cap within 2 years. First, I believe the Chinese e-commerce market, which is the biggest in the world, is big enough for multiple large players, including Alibaba, Pinduoduo, and JD.com. But I believe Alibaba will continue to be the dominant leader in e-commerce for many years. Alibaba already has the largest e-commerce market share of over 50% in China. Alibaba's total retail e-commerce sales are also far ahead of JD.com's and Pinduoduo's in China. Second, Alibaba will continue to benefit from the current trend of customers buying more products online using their mobile devices. China already has the biggest e-commerce market in the world. China is expected to overtake the US as the world's largest total retail sales in 2020 because of COVID. Third, if Alibaba's free cash flow growth grows at an average 26.4% each year, same as the compound annual growth rate between 2016 and 2020, then Alibaba should reach $382 per share or 1 trillion in market cap in about 1.5 years. Fourth, Pinduoduo is Alibaba's biggest competitor now, with monthly active users and annual active customers almost as much as Alibaba's. But I think it will be very hard for Pinduoduo to compete with Alibaba in Tier 1 cities because Alibaba already has a near monopoly in the traditional B2C, C2C, and B2B e-commerce market. Now, if you like this video about Alibaba stock, smash the like button and subscribe. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching.